It's been smooth sailing for the S&P 500 for a few months now, apparently without regard for all the unemployment and business closures due to the pandemic. It may be about to end though. Stick around and I'll show you what I see on the chart. Hi, this is Tim from TradingStrategyGuides.com. Today's trade pick is a bear flag on the E-mini S&P 500 futures. So hang around and I'll show it to you. But first, we've got a few active trades to look at. And later on, today's trading maxim. Hey, it's Friday. Let's slide into this weekend. Remember to click the subscribe button and hit that bell so you won't miss any of these great trade setups. Let's take a look at our active trades. Here's Tesla. It's pulled back quite a bit, but turned and popped right here. Isn't that nice? We're waiting for the parabolic SAR to track up here above the break-even stop so that we can follow the stops on this one. Just an interesting side note, Tesla has a newish product called the Megapack. Think Tesla Powerwall on steroids. Each Megapack includes 3 megawatt hours of battery storage and a 1.5 megawatt power inverter. The installations are happening on at least a couple of Canadian wind farms, and if I'm not mistaken, will provide as much as 20 megawatt hours of battery storage for each 10 megawatt wind generator. In addition to that, the California utility company PG&E that we've traded a couple of times has gotten approval to install a gigawatt hour Megapack installation in California. In case you didn't know, that's 1,000 megawatt hours. And Hawaiian Electric is also planning on installing about 900 megawatt hours of Megapacks. I'm continually fascinated by Tesla's innovations in battery technology. I'll include links to these articles in the description box below. We got half on the crude trade right here, and it popped up here on Tuesday and hit our break-even stop on the second half. So I'm done with crude for right now. The Dow Jones hit our first target on Monday, right here, just barely, and then popped up and took us out right at break-even on the second half. So we got half off in profit right here at the first target and hit our stop later in the day. So I'm done with the Dow for right now. I'm still long in this annoying Euro-Canadian dollar and waiting for it to hit my target up here at 155.38 or close back inside the bull flag. We'll take a loss, or of course if it hits the stop we'll be out of it as well. So let's just see what this thing does. It has been avoiding closing back in the bull flag here. I totally missed this one. It looks like it actually may have closed in there, but I'm still long on this one. If you're out, you're probably better off than I am. As I anticipated, the Australian dollar, US dollar triggered the sell signal Thursday right here. I'm in this at 68.53-ish. Stop loss at 70.10. First target at 67.48. Now we wait on this one. And lastly, let's take a look at the Bitcoin here. Bitcoin pushed down below the triangle. Of course, this is a bullish signal or a bullish pattern, so we'll only be taking buys from this. The dashed line is where the triangle used to be. I redrew the triangle because we still have descending volume and volatility right down here. So I just redraw this, and functionally the only thing that this causes is a longer time to look for our break above 10.220. Still looking for that candle close above 10.220 for a buy trigger. And that's it for the active trades. Let's take a look at today's pick. As you can see, the S&P 500's been pretty bullish since mid-late March right here, but it looks like this move up is kind of rolling over a little bit here, and when this wick was put in here, that made a pretty nice bear flag. So just so we're on the same page here, a bear flag consists of an incoming downtrend like this one here, and then an ascending parallel price channel like this. A bear flag is a bearish consolidation, so I will only take a sell trigger on this. And the pattern is confirmed by a decline in volume and volatility down here. I measure the volatility using the average true range, or ATR, which shows the average length of the last 14 candles. And here's the trade plan. We're going to sell a daily candle close below the bear flag. On the breaking candle, we want to see this volume bar reach up to the volume average right here. If it doesn't quite reach the average, but does reach 75% of the average, I'll open a half-size position to reduce risk. You can calculate the percentage by dividing the volume by the volume average, and you should get at least 0.75. If you don't get at least 0.75 on that, I would stand aside on this trade. The stop loss is 1.5 times the ATR. First target is 1 times the ATR. So let's say this breaks right here, and we get our close right here, just ahead of this close. You want to look at it maybe 15 minutes before the market closes, and you'll sell. That's your sell signal. And on that day, you'll look down here at the ATR. You'll multiply that number by 1.5, measure that distance above, and that will be your stop loss. Measure 1 ATR below, and that will be your first target. If after entering the trade we get a candle that closes back up in the bear flag, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout below the bear flag should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. These two rules are the very definition of cutting your losses and letting your winners run. Typically I do this using 2 positions. The first position has a stop loss and a take profit. That position will close automatically when the target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade, and that's today's setup on the E-mini S&P 500. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today we're going to go back a little ways for our maxim of the day. Tim's trading maxim number 37. There are 2 kinds of people in this game, humble ones and those who are about to be. That's a quote from Logan Gelbrick. Logan Gelbrick was a catcher with the University of San Diego and then the San Diego Padres. Logan is also the founder of Functional Fitness on the Bluffs and Original Nutritionals, as well as an athlete and coach at CrossFit Los Angeles. In this quote, he, of course, was referring to the game of baseball, but this applies to just about anything you wish. There's nothing worse for a new trader than to make some big wins right in the beginning of their trading career. It gives you the feeling that you're invincible. Just remember, the market does what the market does, and no one can know exactly what that will be. So you should always cover your back and make sure you're not over-leveraging your trades. That's why I only risk 2% on any one trade. Remember our S&P 500 trade plan for today. We're going to sell a daily candle close below the bear flag. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. And don't forget to sign up for my free Trading Picks email list to be sure you don't miss any of these great picks. I send out about 2 or 3 picks a week from all different markets, and you'll get to see them first. Best thing is, it's free. I'll put the link below this video. And be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video, or both. And remember, the only stupid question is the unasked one. And don't miss the next installment of the Trading Education series next Wednesday, when I'll talk about trading platforms. As always, thanks for watching, thanks for subscribing. Don't forget to hit the thumbs up below. Have a great weekend, and I'll see you Monday.